Good morning, ladies and gentlemen. And I think in the morning session, we had a very detailed view as to why there is a need for changing the accounting system. And I think it's more a need now rather than a way forward. There's no other way forward but to go with this in the future. Now we've also I like the way the finance minister put it, that and he said it very well, that if the organization is getting a lot of competition from the outside now, which was not there previously, and now it is developing, and the competition is becoming more fierce day by day. And if we do not change, and if we do not grow the proper way, then probably we will crumble under our own weight. I think he said it very aptly in that two lines that he said. And I think there is the need for the railways to move for this move. And what I am supposed to be talking about is the lenders' view. Now, for the lender's view, I think all of us know what the lenders do. Lenders or investors, for that matter, lend money or invest money only with a first and foremost intention of A, getting back the principal, and B, making some money out of it. I think this is universal. Whoever is an investor or whoever is a lender, he is very clear that he should get back his principal, and B, he should get back some interest over and above that principal. So if a lender intends to lend money, lend a debt, or if an investor wants to invest in an organization, he needs to take a decision which is an informed decision. He cannot take a decision which is uninformed. And we have seen many a crisis which happened because people were not informed about the product that they were getting into. We've seen the 2008, I think that is a classical case. The bankers didn't know what they were getting into. So we need to have an informed decision. Now, as a lender, therefore, the first thing that any lender or investor looks at is, where's the information? And for this information, the first and the foremost thing is the balance sheet and the P&L and the cash flow and all these data at one point, in one statement, which will give us a clear picture of what the organization is, how its financial strengths are, and there should be a clarity to that. So that is my I think that is the first place where the bankers start. These were certain things that has already been said in the last session, so I don't want to go ahead and repeat them. This is where the present funding mechanism in railways is as of date. So if we look at this format, we do not finance, the lenders do not finance, or even the investors do not invest in the Ministry of Railways. What they finance is the NBFC part of it, which is the IRFC, and this is owner of the rolling stocks and many select projects of the IR, Indian Railways, right? So the investors and lenders finance the IRFC, or multilateral agencies through the Ministry of Finance then finance directly into the railway PSUs. Now there are 16 railway PSUs. All of them are incorporated as companies. And therefore, the funding is done both by the investors and both by the lenders, maybe the international ones, or the bankers, Indian bankers, through IRFC, which is a company, or to the project SPVs and the PPP SPVs. So we as lenders always tend to fund only to the incorporated companies. Now, why do we fund the incorporated companies? Because we have the standard accounts available to us. So this data is available to us when it is an incorporated company. And it helps us to understand there is a clarity, there is transparency. We can understand whether there is profitability, whether the revenues are there. So all this helps us to take a decision. So the first thing is, even today, irrespective of there not being an accounting standards for the Indian Railways, the banks lend or tend to lend only to the project SPVs and the PPP SPVs, where there is which is an incorporated company and where there is a standard accounting systems available. It gives a lot of comfort to the banks. Now, there are 16 railway PSUs. These railway PSUs, which receive through the Ministry of Finance budget, may also get into the project SPVs through equity. And the banks fund them by the debt. That is the present status of financing the railways. However, the borrower's viability in all these cases, whether it be PPP, SPV, whether it be the SPV formed by the PSUs, the revenues are the entire viability of each of these companies depends solely on the Indian Railways, because that's their sole client. And therefore, for the banker, even if they are funding it to a company, the ultimate sole client of the company being Indian Railways, necessarily the bankers are worried about how the Indian Railways revenues, costs and other aspects are. So that's where Indian Railways need to move to need to change the accounting standards. So the Indian Railways, now even if it is a SPV, the Indian Railways collect the revenue. The revenue collection is not done by the bank, by these SPVs. It is done by the Indian Railways, and they send only the surplus after appropriating the O&M expenses. Now this is another source of issue that most of the lenders have. Now, how are these O&M expenses appropriated? It's very opaque as of today, because there's no standard where we cannot say that this is the cost, this is the expense, and this is the way the allocation has happened. So, although the SPVs are funded by bankers which feel that it is a company and therefore they will get a balance sheet and other financial statements, the issue is that because Railways is their sole client and because Railways does all the revenue collection, not only does the railway do only this revenue collection and pass it on to the SPVs, they do the deduction of the O&M expenses. And we do not know how the process of O&M expenses is very opaque. And therefore, whenever we create a model for projections, for estimates, this O&M can become a little opaque and we become more conservative. Many a times with the Honorable Minister for Railways, he always complains that bankers are very, very conservative. But this is one of the main reasons, because we do not know what is the O&M cost today and how it has been subscribed, or how has that expense been allocated to the O&M expense. So this reason is one of the concerns that the lenders find. So the other one is that the transparency, that is what we have said, the revenue and expense allocation transparency helps. The second one is the tariff declaration or the tariff determination. Now, if the cost is not known or is opaque, or you cannot allocate the cost, I think pricing becomes a little more difficult. it is, as of today, all of us know that it is done intermittently, right? But we should, even if we want to make a decision of pricing a product at a price, I think it is very important for us to know, at least be informed, that yes, this price may be at a loss, but at what loss? So this is very important to determine the tariff for the companies. Now, owing to these issues, the lenders, like I said, project evaluation and viability assessment becomes difficult, and therefore they become more conservative. Monitoring of project cash flows. Now, all of us know that as a lender, my first security is the cash flows. I do the escrow of the cash flows from a project, and that is my first security as a lender. Now, if there is no way of monitoring the project cash flows, because the Indian Railways will first take the revenue, first collect the revenues, they will deduct the O&M expenses, and only the balance amount is credited into the escrow accounts. So there is no way that we will be able to monitor the cash flow generation out of that project. And the third one, like I said, is the audit of cash flows in specific cases. Now, this is more important if there are going to be project specific funding. There could be some difference of opinions, and this will be particularly so if the railways, which they are doing now, are now going to be partnering with maybe the states, maybe private players, and this will happen more and more so in the near future. So there will be number of stakeholders in that organization, and if there is a issue about the cash flow not being properly determined, I think this could lead to a lot of issues in the near future. And in the process, who suffers is the lender. There are so many cases. So that is another. So we should be able to. The lender would feel more comfortable and would be able to do the proper assessment if, in case of requirement, he is able to audit the cash flow of a particular specific case. But this, as of today, is not possible, and therefore the conservativeness comes into the lenders. Now, like I just said before in the previous, the first and the foremost thing that a lender looks at is the escrowing of the project cash flows. And this is our security. It also helps us monitor. It also helps us monitor to find out whether this is a viable project. And if this is not possible, then lenders are uncomfortable. Accounting reforms establish creditable, this is most important, credible and auditable revenues and cost allocation. So the whole purpose of all this, I think, is to have a credible costing, credible revenue, credible profitability, which will help bankers to look forward, to do the projections, to do the proper modeling of their structure, financial structures, and in the process help railways to grow by giving more funds. This is what about it is. Now, clear visibility of future tariff will also, because like the Honorable Minister said, we cannot have populism over commerce or over profitability, or because if an organization has to be sustainable, if it has to be sustainable over a long period of time, over say 20, 30, 100 years, I think it has to at least break even, if not make profits. That's very important. So a clear visibility of future tariffs can be at least worked out, like in NHAI. They have a standardized formula which they have been able to do. Why? Because there has been some way we have been able to see the visibility of cash flows. So clear visibility will help us to understand what the future tariffs need to be. Whether we implement it today, whether we implement it 1 year down or 1.5 years down, that is a decision that can be taken later. But we need to know this, and that is what is required by the lenders. Now, these appropriate disclosures like schedules, notes, asset to the liabilities, this all helps in benchmarking at the time of project appraisal. So these project appraisal as lenders, whenever we do this, all this is required. So that is about the. Now, another thing that I want to talk about, now this is from the lender's perspective, that we need to have a transparent financials, we need to have clarity, we need to know what are the revenues, we need to know how cost allocation has been done, we need to know whether there is profits or not, and this helps us to finance. However, this said, there are these 16 PSUs of the railway entities. Now, these railway entities are undertaking various commercial activities, and there is a revenue, there is a PAT, equity, net worth. I put it on because I wanted everyone to see that there is a revenue, there is a PAT, there is an equity, and there is a net worth. Now, this account, the change in accounting system will help us to identify of these PSUs, which are the PSUs which are profitable, or which can be hived off, which can be separated, and which after separation the bankers or the lenders or the investors will be more comfortable funding. And once, if we are able to do that, if we are able to take out the self-sustainable or specific profitable operational companies, and we are able to lend, the banks are able to lend by way of securitization, by way of capex expenditure, or by working capital, the debt funding or the dependency on the Indian Railways or the government would come down for these institutions, and then the funds or the allocated funds to the Indian Railways can be used for many other projects. So this not only helps the change in the accounting will not only help the lenders, not only will give a comfort to the lenders, will not only ensure that lenders give it at a finer pricing and a larger quantity, because that's another issue which we find, that the pricing is very high. That is usually a complaint that I receive from Indian Railways. But the issue is, if we need to have a finer pricing, if we have to have a larger amount of funding, this will help. So from the lender's point of view, this is good, but from the Indian Railways point of view, also this will help in growth and a faster growth. So we will be able to allot the funds that are there with the Indian Railways to other projects which may be which may be of social importance, or which, as per the railways, may be very critical. So this is what I had to say about the lenders. I don't know, I have some more issues. I think I'll just leave it because these are some of the challenges that lenders face, key challenges, but these have got nothing to do with accounting. These have got to do more with the other aspects. So I just want you to keep in mind that these are the other aspects. Today I don't want to elaborate on it, mainly because this has nothing got to do with the accounting. Thank you.